Monday, September 30th. I think it's the last day in September. I don't know. I don't know the months. I have no idea. I mean, kill me. I don't know which months have 31, which months have 30. I think September is one of those 30s. I do know that this year, Halloween is for the first time in history on Friday the 13th. Somebody I know fell for that joke, so it is what it is. Remember, I just want to point out one thing, and it's the first thing that I'm going to point out. Seeking Alpha Premium goes up in price. I've been posting this one. I'm going to read it, the message directly from Seeking Alpha so I don't screw this up. Currently, the Seeking Alpha Premium price on seekingalpha.com is $299. My exclusive offer is that it's $214. After October 4th, the affiliate price goes up to $269, which means that if you sign up through me, it's $269. You still save money, but it goes up to $269. Not only will your audience benefit from $214 price, but that renewal rate will also just be $239, a significant savings compared to the $299. So if you're interested in Seeking Alpha Premium, go to the Linktree, linktr.ee. It's the second link right here. And it'll take you to Seeking Alpha Premium, get $25 off your first membership. Price increase is $299, so you have 17 hours and left to do it. So yes, exactly. Today is the last day in September. The Qs. Before we go into the Qs, I want to start as we enter the final quarter, and I will tomorrow have an update to the core portfolio. There's a couple of stocks I'm going to take out of the core portfolio. Not sure if I'm going to add a couple in. One is definitely in. There might be a couple more, but I've been contemplating and doing the research this weekend. If you're interested in the core portfolio and interested in following it, it is a fantastic portfolio. You go down here on Linktree, there's a Savvy Trader link. Savvy Trader, follow my trades for free. It takes you right to the core portfolio. Okay, right to the core portfolio. It's 35 positions. And you might say, well, why do I want to follow this one? Well, it's 35 positions that if you look at it year to date, it's beating the NASDAQ, it's beating the Qs, and it's just 35 positions. Okay, it's 100 shares of those 35 positions. You may say, well, I don't want 100 shares of those 35 positions. These are names that, in my opinion, you can trade around and they won't necessarily hurt you. Shopify, it's a great trade. You know, it's up at $80 right now. Roblox, it's at 44. I say buy and sell that one around 40. Bank of America, it's below 40. You can buy it below 40. Palantir, I've been telling that one since 10. I said it was $20 stock. It's at 36 right now. Cleveland Cliffs, I like this one to continue going up as long as we have some type of need for materials in this country. Now, XLK, XLY, those are just ETFs. Qs, ETFs, Microsoft, QQQ, Goldman Sachs, VOO. It is 35 names. And again, I would never manage a portfolio this way where it's 100 shares of each of these. But in my mind, this is the easiest way. If you're brand new to investing, just take a look at those names. Try and figure out an entry point in them. And I think you could just buy and hold most of those names. But since it's the end of the quarter, I will be I will be updating that for the fourth quarter. So if you're interested, you can subscribe on Savvy Trader. Now, the other thing that I want you to be aware of is as we enter into the fourth quarter, be aware of your tax situation. This is how important taxes are, okay? This is compounding. So if you just take, double every year, and you're not going to double in the stock market every year. But if you were to do this over 20 years and you were to double your money each year, okay, from $2 without taxes, you'd get $1.04 million, okay? You'd be a millionaire. So your IRA over 20 years, if you doubled it every year, and that's not likely, but if you doubled it every year and started with $2 over 20 years, you'd become a millionaire. Now, if you just take 25% out, which is your average tax rate for most millionaires, is going to be between 19 and 20%, somewhere in that. A lot of billionaires can whittle that down to about an 8% effective tax rate, but 25%, it's not unheard of to have a 25% tax rate. And so that's why it's so important. You can see that $2 becomes $72,000 over 20 years. That's a major difference. And I thought this graphic showed you make sure you understand your tax situation and not avoiding taxes, but minimizing your taxes, whether it's through retirement accounts, whether it's through write-offs, whether it's through hiring a tax professional, writing off, a portion of your house, whatever you can do, long-term versus short-term. Remember, long-term capital gains for most people, it's 15%. That is a significant savings over a short term. Say you're making, $70,000, $80,000 a year, and all of a sudden you make $70,000 on this one trade, but you hold it for less than a year. That $70,000 is taxed as ordinary income. And that's going to be about 25% taxes versus if you just held it for a year, you're paying 15%. So this is why it's so important to understand your tax situation. Okay. Now, the charts, the Qs. We're seeing the MACD getting up to where it crossed down before and where you were at 480, where you topped out here and you came down. And I've said it before that last year at this time, we had 3 downturns. Okay. 3 downturns of 8% or more last year at this time. We've had 2, and these aren't 8%. They just go down to about 450 and then pump up. Now, the MACD is extended. The RSI is a little bit overbought at 64. Doesn't mean we can't go up, but it does mean that you're a little bit extended. When you look at a weekly chart on the Qs, the MACD looks like it's going to cross up, not down. The RSI is in no man's land at 59. It's not 60, but it's at 59. So where the market's going, I don't know, but we can take a look at it. I've got some charts in here about election years. David Tepper says buy everything. Tom Lee says just get in the permable. Tomorrow is SMCI split day. We've got Apple on the thing, Meta with street high price target, Tesla deliveries, and we've got everything that's coming up this week. So keep an eye out. This week, it's a big week ahead. Fed chair speaks on Monday at 1:55 p.m. today. That's always a market mover. If he says anything about rate cuts, you're going to see the market soar. If he says we want to be data dependent, you might not see the market soar. S&P, final U.S. manufacturing PMI, ISM manufacturing, job openings, which is huge, ADP employment, U.S. farm report, U.S. unemployment rate. Then we have earnings from Nike, PayX, Constellation Brands, Carnival, McKesson, and Levi. So it's a big week. And my favorite way to look at the week is this catalyst report that comes out at 3 p.m. on Friday from Seeking Alpha. You'll see how it's displayed here by all week, Monday, all day, Tuesday, all day, Wednesday, all day, Thursday, and Friday. So all of these things are listed out by day so that on Friday, I can put together in my Apple Notes, I can say Monday, here's what I'm looking at. Tuesday, here's what I'm looking at. Wednesday, here's what I'm looking at. Thursday, and I can do it by day in Apple Notes. That's the way I like to organize. You can use spreadsheets. You can do whatever. If you have an Android phone, boo on you. I love Apple. I just like the Apple tools way better. The ecosystem has me sucked in, but this Catalyst report, and remember, I went over it, Seeking Alpha Premium is on discount. So if this Catalyst report by day and that kind of organization makes sense to you, then get it. Part of the reason why I have Seeking Alpha is to save me time. The $299 that I paid each year when I had it was nothing compared to the amount of time that I saved by just going to the one website without ads. And it gave me the tools that I needed. I don't have 40 different analyst researchers like a hedge fund has for me. I can just go home here and I can see the trending analysis and I can look at everything. Palantir, BlackBerry, a wave of volatility is about to hit the market. S&P strap in for a wild October. 5 things investors need to know for 2025 economic stock market boom. I listened this weekend to the compound, and this, in fact, this clip is fantastic. Tom Lee says buy everything. Go and watch this clip on Instagram. I'll include it in the newsletter. I listened to the whole podcast this weekend. It's very good. It's like an hour and 13 minutes. They talk about the bull and bear cases for the market, how the election doesn't matter. The election doesn't matter. The election, think back on it. Which party is going to give us the biggest boom in the election? If you're partisan, then you might think it's Republicans. And I would point out to you, 2021 was a damn good year after Biden won. I would also point out, if you're Democrat and you say there's no way Trump is going to do well, I would point out 2017, like a 30% gain. So it doesn't matter. They also go over China. Tom Lee is big bull on China. And small caps are a buy. And why? They go over FXI, in fact. FXI is a China ETF. And what's interesting about it, they bring up, it's a strong buy in the quant. They bring up the short percentage, and it's like, 50, 60% short. This one could be in a short squeeze. And that's what they brought up. I think this one's interesting. Again, if you're interested, go and listen to The Compound with Josh Brown and Tom Lee. It is a really, really good episode. I think they go over everything and the charts that they bring up. If you want to watch the charts, go on YouTube and look at the Compound. Now, 10 largest S&Ps by decade. I wanted to bring this up because I always talk about how big gets bigger. Well, sometimes big doesn't get bigger. Look at the 1990s. The percentage of the index, 2.9%, Exxon, IBM, Philip Morris, International, Shell, Bristol Myers, Merck. Are they even in the top 10 now? Well, let's look at 2000. Okay, 2000's Exxon, Pfizer, Cisco, Citibank, Walmart, Microsoft. Microsoft makes its first appearance there. AIG, Merck, Intel. Then we go to 2010. Exxon's still there. It's still up at 3.2% of the entire market. Apple makes its first appearance at 2.6. Then there's Microsoft, then GE, then Chevron. Then we get to this year. Apple is 7% of the S&P. Nvidia never made an appearance. It's now 6.4%. Microsoft is now 6.4%. Alphabet is 6.2%. Amazon 3.8%. Meta 2.4%. Eli Lilly, Broadcom, Tesla, and JP Morgan. None of these top ones appeared other than Apple and Microsoft in this one. Okay, JP Morgan Chase is down at the bottom for the last 2 decades. That's just it. Intel's not in here. If you invested in Intel in 2000 thinking this is going to be the big one, you've made a mistake. So I thought this was good to point out because while I say big gets bigger, and I do think that Apple is a huge, huge winner because, and I brought this up, Meta has the app that everybody goes to for AI right now. Okay, they have the number one app that's using AI, and they're going to be able to monetize it. And again, I think that 2.4% gets Meta even higher. Apple, on the other hand, has the device that you will use to get to that app, and that is the iPhone. So Apple could interject those people who are going to that app if they have it on their device and it's integrated into the quote-unquote ecosystem, and they're able, say, for instance, you want to make reservations while you're guiding, map, and you have your iPhone or your iWatch or, Apple Watch or whatever, you could do it. You don't even need Meta to do it. Meta's probably going to launch a Maps app. And they're probably going to navigate you. I mean, it's not a huge leap to think that Meta will actually launch something that will guide you via GPS. So I do think that those two have huge ability here. I think Microsoft has a huge ability. Johnny Ives and OpenAI are said to be working on a device that could change things. Again, I think big gets bigger, but I think there's some disruption there. Now, NASDAQ made its first higher high on the daily since all-time highs back in July. This chart says it all. Okay? Remember what we always want to see. We want to see higher highs and higher lows. That is a bottom left to upper right market. Okay? This is good news for the market, but we just went over the cues. This is a bottom left to upper right market. We just went over this. Okay, on a 4-hour, on a tighter time frame, I think you start to see a little pullback. It doesn't mean that it's for sure. Nobody can tell you for sure. But again, the good news is on the daily, we're making higher highs. In my mind, I think that continues the trend higher. Now, another thing, Let's look at election years. I said the election doesn't matter, but in October, when the election hasn't been decided, in the last 6 election years, okay, that goes back 24 years, 6 times 4, the NASDAQ has only been green once in October with an average of minus 4.69%. We look at this short term, okay, of the Qs, and we see the MACD turning over. And Trendspider, if you're able to do this, you can do this in Trendspider with the seasonality. You can exclude years and just go back every 4 years and look at the election and say, we've only been positive once. Well, what does that tell me? It tells me I ain't buying today. I don't want to buy today. I may not want to buy until the middle of October, until I'm sure where this market is going. If we get to 500 by the middle of October, in my mind, I think I'm buying. Because if 500 turns into the support level instead of the resistance, I want to buy. I don't care if it's higher. I just want to buy. And the reason is because I think the Qs are just going to go higher. You know, you can talk about this. Dan Ives. We believe the stage is set for tech stocks to move 10% higher into the end of the year and another 20% in 2025, with the tech bull market just hitting its next phase. With the AI revolution, we believe the overall AI infrastructure market opportunity could grow 10 times from today through 2027. Again, if that's moving, if it's the AI market, it's the Qs that you want to be in. And we can even go over here. Okay, we talked about the China stuff. We'll do QQQ. And let's just track this against the S&P. Okay, against the S&P, the Qs over 1 year, you're outperforming 37 to 34%. You go to year to date, and the Qs are up 18%. So you still have 2% up to catch up to the S&P year to date. Now, over 3 years, you're beating. Over 5 years, you're beating by a lot, doubling. Over 10 years, you're beating by a lot, doubling. So I do think that this one, these types of people are huge in trying to identify, hey, we still have room to run. Now, the valuations are high, yes. But with rates lowering, does that expand earnings? That's going to have to be your thing. Now, we talked about David Tepper saying last week, just buy everything. I showed you last week his clip from 2010, which turned out to be 100% correct. Buy everything. What's the other news that he made in this interview? Projections for nuclear power AI are crazy. He's talked to Republican and Democrat governors, and he said they are not going to let their nuclear power come offline. So nuclear is huge. Now, what's one nuclear stock that you can buy? CEG, Constellation Energy Group. You can buy other nuclear stocks. You can go and look at some of the peers of Constellation Energy, Duke Energy, Southern Company. You can look at other stuff. There are other ones out there. But again, the point is, David Tepper thinks that nuclear has a bull market. Now, this article, Costco keeps analysts busy working out the valuation. I thought this was an absolutely fantastic look at how they value a company's stock price, how Wall Street is having problems justifying the price of Costco. Okay, it's a great. Getting to $900 plus is tough on this name. Right now, you're trading at $885. The average Wall Street price target, we can go and look at this, it's $921. That's 4% from where you're trading today. But this article points out Barclays bumped its price target on the big box retailer to $850 after pointing to strong underlying trends. Morgan Stanley called Costco the envy of the retail, backed its overweight rating with a price target of $950. That's tough. JP Morgan hikes its price target from to $945 from $925. The firm said that the 2025 price target is based on a multiple of 50 times the full year 2026 earnings per share forecast. The average price target on Costco from sell side firms is $907. That means the sell side thinks that it's $907. It's trading at $885. Again, I'm not paying 50 times for Costco, but I do own it in ETFs. If we go and look at it, it's literally 49.80 forward PE. That's hard to justify. It's hard to justify. Now, SMCI, it's split day today. So it's 10 for 1 split. So at the end of the day, you will get for that $422 price right now, it will be $42. Is that going to be a spurt for the stock tomorrow? My take on this one, again, this is in the core portfolio from Savvy Trader. You can see those that it's in there. I bought this one. I'm up 35% since I bought it in the core portfolio June of last year, I believe, when I set this one up. So I'm still up 35%. It was up much more. But today is the 10 for 1 stock split. So I will have to sell 900 shares of SMCI if it stays in the core portfolio. And there's a little foreshadowing for tomorrow's rebalancing of the core portfolio. I just, honest to God, it's a downward trend. Look at that trend line and look at how the top end, so how it was resistance going into this and how it's turned into support. This trend line was resistance here. Now it's turned into support. So if you think we're going up, we haven't reversed this trend. It's now support. It's not great news for this one. And again, they're still waiting for the 10K. So that's where I'm a little bit worried. Now, BABA. We can point to BABA. We talked about China. Alibaba soared 20% last week. Best performance and highest volume since early 2023. Is China just heating up? The volume is the key. And on this chart, the volume's down at the bottom here. You can't see it on the screen, but I will pull it up on my chart. You'll see it. Relative volume. Okay? It is at its high. Volume pushes the stock higher or lower. If you have higher volume on the sale and the stock is trending down, you're going to see the stock continue down. If you see higher trending volume on the buy side and the stock is going up, you're going to see it continue to go up. Now, this is a little bit crazy. Bollinger Bands wide open on this one. Okay, we had that cinching up. We had that the contraction of the Bollinger Bands. Your MACD incredibly high. The RSI at 86. Would I buy it now? It's a tough buy. The 50-day is still moving negative. The 200-day is at 120. You're trading at 110. So you still have, 5-10% move till the 200-day? But that 200-day should provide some resistance, if not a pullback. The only other higher volume was here on March 21st, 2022, when it was selling at $88. Now, I've identified on this weekly that about $90 was a resistance. You can see it. It pulled back here. It pumped up to 120 and then pulled back. I would expect that 120 to be an additional resistance. We can put this up at 120. If we put this up at 120 and we look at it, we'll put it right there. 119, okay? You can see it pulled back here. It pulled back here. Where are we going to? Probably 120. And then we'll see a pullback. It's just over short term. It's overbought right now. But BABA, the key point on this particular tweet is the volume. Is it just heating up? Now, I thought this was great. Apple likely to gain in the holiday season. Apple is up almost 2% today to 232. It's getting some good news on it. This is a great analyst feature. Again, I don't have, the 20 analysts that work for me. That's what I use Seeking Alpha for. There are like 40, 50 analysts that I actually like, and I like reading on Seeking Alpha, and I trust their opinion. Do I go out and buy it when they say to buy it? No. This particular analyst, this is his first opinion on Apple, and he says it could gain in the holiday quarter. I continue to agree with him. The key point, Apple's free cash flow is likely to be at or above $110 billion this year. If the company is capable of meeting the above-mentioned revenue and margin expectations, it's likely that Apple also will be able to grow its free cash flow in the high single digits in 2025, 2026. I would also anticipate similar levels of Apple increasing share repurchasing plans in each of the next 2 years. And he talks about the Apple premium valuation. Apple's not discounting their products. Now, the 16 standard and the 16 Pro this year, there's not much of a difference between there other than the savings. So I do think that they're trying to get people to upgrade into this cycle because that 16 is the value phone. I really, really like this one. And this article in particular points it out. Now, we talked about Apple as far as the AI stuff. Meta just got a new high street price target, $811. Rosenblatt raised their price target from $643 to $811. Meta, its market cap right now is $1.44. It's not at $3 trillion. So they're just printing cash. Now, Zuckerberg loves to spend. That's the problem you're going to have. The average price target is $583 on the street. There are 67 analysts that rate this one. Okay, 2 say sell, 7 say hold. This one has just been a rocket ship, an absolute rocket ship. I said get this under 500. When it was under 500, you're up 10% if you got this one under 500. If you got this one at 524 on the 4-hour algorithm, you're doing great. Would I buy this now? I would not. And the reason I would not is we haven't retested this particular support level right here. Okay, this was resistance. You can see once, twice, 3 times it's hit that 540 level and then pulled back. You need to pull back to 540 to test it. I don't care if it's 580 by the time it gets to the next earnings. You need to pull back in order to support that. When we look at the weekly, is this one overstretched? No, you could absolutely pull this one forward, and it could be 580 by the next time the earnings come around. If your time frame is over 1 year, just go ahead and buy it. This one, I think Apple wins on the device front. I think Meta wins on the AI front, and I think Meta is firing on all cylinders. I think that's where Meta is going to win. So in Meta, I think it's a great one. Now, Gene Munster, if you're into Tesla, Tesla's September quarterly deliveries come out on Tuesday, tomorrow. Big picture, this should be a heads Tesla wins, tails they don't lose number, because delivery should return to growth. Do you want to get into Tesla? Let's see where Tesla is today. Tesla is up 1% at 263. Same kind of thing as Meta. That 260 has been a resistance level. And until you pull back and you actually test it as support, because it's broken down, once, twice, 3, 4 times, it's pulled back from that 260 level. And from a weekly standpoint, again, that 260, if you get the 260, you're going to 414. Gene Munster lays it out here. I'll put this in the newsletter. I won't read all of this. I think it's not a bad one. I think Tesla is winning on the AI front. I think Elon will make that an AI company. It's not going to be a car company. So earnings this week, Carnival Cruise Line, Nike, Constellation Brands. We talked about that. ConAgra, McCormick, Paychex, Lamb Weston, Levi. All of these are outlined in this article. If you're interested in this, this is a great article because it gives you exactly what you're looking for. If you want a free version of this article, just go to Earnings Hub. Earnings Hub, I love. Okay. And you can just look at what we're expecting. Now, the big earnings happen next week. I'm sorry. Yeah, I think it's next week. Let's go. It starts, Friday the 11th. Okay. That's when we get JP Morgan, Wells Fargo, BlackRock. We get a bunch of these, bunch of banks. And then the following week after that, that's when you start getting United Health, Johnson & Johnson, United Airlines. You get a bunch of earnings. You get Tesla, you get Netflix, you get Taiwan Semi, you get Procter & Gamble, you get Ally Bank, American Express. You get a bunch of earnings. That's when earnings starts. So you want to be prepared for when earnings starts. Now let's get to social requests. Carlos on Spotify wants me to look at Toyota. It would help if you guys gave me the symbol so that I don't get stuck and telling me about it. But Toyota, here's where it is. It dipped down. So from a chart standpoint, the algorithm, the 4-hour algorithm, got you in at 177. You're trading at 178. Looks like it got up to 189. And then we've pulled back a little bit. Today, it looks like their earnings are coming up on October 29th. Let's go and look at some of the fundamentals. We'll go and look at Toyota here. Let's see. It's a hold, has a risk of cutting its dividend. So momentum is, everything looks good except for momentum. And when you look at it, it's down 10% in 3 months, down 27% in 6 months. In 9 months, it's up 1% 1 year. So the long term, it looks like it was up. Did it run too much? We can look at the valuation. They're not making money. If they return to making money, that would be better. They're growing 18% revenue year over year. Leverage free cash flow, they don't have any because they're not making money. So in my mind, that's going to be the problem. Now, the TM is at risk of displaying warning signs that have historically led to dividend cuts. The company has a dividend score of F. Over the last 11 years, 64% of stocks with F did cut their dividend. So you might have more of a downside. Now it's ranked number 5 out of 29. In the quant, GM's number 1. So I don't know that I'm interested in any auto company. Wall Street says it's a buy. Their price target is 234. But FYI, there's 4 analysts that cover this. So take that with a grain of salt. Now, you can check out all of these others who say it's a strong buy. This guy said it was a strong buy here. He's up 5%. Or I'm sorry, 5%. S&P during that time's up 7%. This guy said sell. This one down 7%. That's great. So some of these are better than others. But that's what I mean about having analysts in your pocket. JD from email. Best fintech for rate cuts. Now, this was interesting because I told JD. JD said, literally, that's the email that he sent. Best fintechs for rate cuts, ? SoFi ? So I told JD, go and ask AI. I'm not a fintech expert. The result that he asked, he sent it to me. And by the way, I told him, I said, Gary's not a teacher. Gary's a teacher, not a tool. AI is a tool you should use. There's a big difference. Gary's a teacher. Okay, you can ask your teacher questions, but the teacher doesn't go out and do the work for you. It's your tools that will go out there and do the work for you. So I'm very clear. I'm a large cap tech investor. Now, fintech, invest in it every now and then. I'm not an expert. Rate cuts. We haven't seen rate cuts since what? COVID. COVID was the last one, but before that, it was like the 2000s, somewhere in that neighborhood, 1990s, where we saw and we've never seen this large of rate cuts that are going to be needed. But AI said SoFi Technology is known for its diversified financial services, Lending Club, Upstart, Square, and PayPal. I would argue Upstart is probably one you want to be careful of, but let's look at SoFi. Okay, and here's where it comes in. SoFi, don't give up. He sent me this one. This is from Stone Fox Capital. They have a strong buy on it. So we can go and have they analysts full recommendation history. We can look at that. Strong buy, SoFi. I mean, he's up since he bought it. I mean, this is the entire analyst. He's up 20% since he bought that. He's up 2% since he bought that one. He's up 9% since he bought that one. He's up 9% in that one. So every time he does it, he's up. Every time he's recommended a strong buy. This is Stone Fox Capital. That's an analyst I would look at. That's how you use your tools. So you go to AI and you say, okay, what are the stock's best fintech stuff? That's how you use your tools. And then you use Seeking Alpha to find an analyst who's actually got some chutzpah or some track record. And that's how you use it. So this weekend on Substack Chats, there was a great discussion by AJ, who actually mentioned a really good one. Looking for your opinion on 3 dividend stocks, long-term, MPLX, PFE, JXN, PRA. And essentially he said this. If you want to see the analysis that I did for him, I posted it in the Substack chat. You can look at it. But here's what AJ, one that he pointed out was JXN. And this is Jackson Financial. This is one I would never look at. But I wanted to point it out because it looks really good. Now, PRA is kind of the same thing. PRA, I don't know that I would necessarily do it, but the 4-hour algorithm makes you 115%. Buying and holding this one over 2 years makes you 192%. Okay, and when he put this up, I said, okay, let me go and look at this one because this one looks interesting in that it's actually winning. And when we go and look at the summary, it's down 1.36% today. When we look at the valuation, it's not bad. The profitability is an F. That's where they're going to have problems is the profitability. But their momentum is really good. Now, it's a diversified financial services. This is a company, I think it's a bank. provides suites of annuities to retail investors in the United States. The company operates 3 segments: retail annuities, institutional, blah, blah, blah. So it's a financial one. They're going to benefit, I believe, from rate cuts. Now, the most recent Wednesday, September 18th, analysts, strong buy. Now, we can look at the analyst history on this one. He's been, strong buy the whole way. And he just gave it another strong buy. Seeking profits is the analyst. And you can take a look at that one. If we want to just look at JXN, that's the most recent one. If you want to look at it, Wall Street says it's a hold. There's 5 analysts that cover it. Take it with a grain of salt. Their average price target, $86. Now, the quant says it's a hold. The only reason that the quant says it's a hold is the profitability. It's been a hold this whole time. Is it a good one? It's ranked number 1 of 8 from Financials Diversified Services. I thought it was a great suggestion. I think if this is something that you want to do, and look at, I think it's a good one. If we look at one of the things that I was looking at was the dividend. It's a nice 3% dividend yield. So their dividend score, grade, it's an A, consistency a D. Let's see, consistency of payouts. Yeah, it's a D, but consecutive years of payments, that's why. But they're not in danger of giving it up. Safety is an A versus the other one, which was Toyota. But I thought that this was a really good discussion in the chat on Substack. If you're in Substack and you want to see the chat on, it's just up here. You can see chat, Daily Stock Pick newsletter. I've got a bunch of threads going on there. So you can take a look at that one. There was another chat this weekend about TQQQ. And I forget who asked it, but he asked about TQQQ and how do you trade this one? Because I had posted, I think for the paid subscribers, that I was trading TQQQ and when and blah, blah, blah. What's my time frame? And that's what he was asking. I'll tell you, just long story short, TQQQ is a daily triple leveraged ETF on the Qs. And so in my mind, I don't think you want to hold it logically for more than a day. Makes sense because it's triple leveraged on a daily. I posted Humphrey Yang's thing that number 2 mistake by investors is the leveraged ETFs. Buying and holding these doesn't work. I would argue, logically, you shouldn't. Illogically, okay? This one, since 2012, TQQQ, as we've been in an uptrend, you've made 12,171% if you just held on to this until the rate cuts actually started. That's where I would argue, since the housing recovery in 2010, you've made over 12,000% just by buying TQQQ. Okay? Now, trading it on a monthly, you could have gotten out with any of that money, you could have gotten out and just done it. And then in 2022, as the rate cuts stopped, could have bought it again. And since then, in 1 year and 8 months, you're up 294%. These are monthly candles. So logically, I would say don't hold it. If your risk tolerance is to put $5,000 or $10,000 and just YOLO it, trade it on a monthly. What I'll do is I will record a video and I will put it on the newsletter. Okay, so sign up for the newsletter. Make sure that you sign up because I'll put a special video on trading triple leveraged ETFs and what I think about them. I'll do it for the newsletter. Now, from Twitter, Bullish Bites, are small caps ready to break out? Bull flag forming on IWM. Price seems to be finding new support. What's your opinion on IWM? I heard on the compound this weekend that IJH is the mid cap ETF. So I personally own, I think it's about $30,000, I don't know, dollars worth of IWM. And I typically don't like IWM, but I did buy it around, I think it was around $50-$60, somewhere in that neighborhood. 59, 60. It was somewhere in that neighborhood. The algorithm makes you 39%, okay, over 24 months. Buying and holding makes you 33%. So there's 23 positions. You win 43% of the time. While we're going up and rates are being cut, I do think it's a time to get into small and medium caps. The IJF got you in here. This is IJF. I should be looking at IWM. IWM makes you 18% versus the 26% buying and holding. So I think I'm in at like, I want to say 210, 2 maybe it's 218, somewhere in that neighborhood. But I did buy, back here in August, and I bought here, I think in September as well. Now the algorithm doesn't beat buy and hold, but I do think that we're in an upward trend. And the reason is, look at that weekly and look at how that golden cross happens. Now, as you cross 212 on a weekly, I think you get to this 244. So in my mind, I think that's where you're looking. Again, Bullish Bites points out on the daily, small caps price seems to be finding new support at 220. I would tend to not agree with the 220. I would tend to agree that the support is probably a little bit lower at about 210. And the reason is because 220, we haven't seen the pullback to test that 220. I would say that 225 looks like a short-term resistance here in July, late in July. And then you had 222 here. I would say there's resistance there, not necessarily support. You want to see it actually use that, go above to like 230, and then use that as support for the pullback. I would say that 212 looks like a pretty good buy, to be honest with you. I mean, I don't think, see how it almost tests it up there, and then you see the pullback. It doesn't quite pull it. You could probably pull it down here to 200. And you saw, if we just pulled this, I don't want to pull it down. We'll add a second one here. So if we just put this at about 207, see how it kind of tests it right there? And then it pulls back, tests it, pulls back. And then you see it break out. And then you see it pull back. And it kind of uses it as support. You could probably bring that down a little bit. But 200, I think, would be more the support level. And I think 225, 226 is more the resistance level. But again, that's the 4 hour. If you look at the daily, it could be completely different. You could see that 223 looking as a resistance, 225, same kind of thing. You can see that 212 that we just had in there as kind of a resistance level there. That didn't really, it broke down on support. So I would say, 200 to 212 is probably where you want to buy that. That's where I would. But I heard, and again, part of the thing was IJH. I heard that IJH may be better because most of these 600 names, the S&P 600, I think this is mid cap. I heard this one might be a better one. And I could be getting the symbol wrong, but the majority of these are actually making money. And so that they were saying I think it was IJH. I'm not sure of the name. But again, it's mid caps typically make the money. It's the small caps that are losing money. So that's where you want to be in. Now let's talk about scans. The Dow scan and core portfolio scan. Coke gets an entry here at 71. Do you want to buy at 70? I've always said that under 60 was the buy here. You're just getting out of that 10%. You're seeing it moves nicely sideways, doing a kind of a capitulation while the MACD resets. And it's down at the oscillator. So on the 4 hour, makes sense. When you take a look at a weekly on this one, this has run an incredible amount. The RSI is still at 73. That MACD is what? 2-3%, 2 or 3 above the oscillator. That's way too high. So if you're looking for long term, I would wait for a further pullback of this one. I think it's run a lot. I think it's still a very good company. Warren Buffett owns a bunch of this. I own a bunch of this. It's just one that is going to continue to run in my life for long term. Path. This is in our the Daily Stock Pick watch list. Path has an entry here at 1246, gets another double entry. It's just kind of capitulating. You have a nice little gap up here at 1833. You've got CSX, you've got KHC, you've got Starbucks with another entry into this one, where we see there's a huge gap that's down below, 97.36. This one, again, I don't know if it's going to cover that gap, but so far we've been seeing resistance at about 100 there. That's an interesting one. Now, Deere, which Trump has said will get a 200% tariff, that didn't stop this one. We got another entry here going on. Bullish trend. And we'll go to weekly, but the actual entry on the 4-hour algorithm was down here at 349. Again, the 4-hour algorithm makes you 29% versus 18% buy and hold. You may be saying, what is the 4-hour algorithm? 4-hour algorithm is here on Trendspider. You go over here to Linktree. It's the top link. Smart charts, real-time scanners, everything that you need to trade. I give you the 4-hour algorithm. Okay, it typically beats buy and hold for many stocks. It's what I use to trade my multi-million-dollar portfolio. And I maintain it using this. I love the 4-hour algorithm. I built it myself with my friend Steve. And both of us still use it to this day after 4 or 5 years of actually owning this. Well, 4 years of actually developing this. And here in the 4-hour, you can see it got you in at 349. Again, on Deere, a standard company, it makes you 29%. You win 42% of the time. But it makes you, buying and holding only makes you 18%. And the reason is because look at this weekly chart. Okay, the weekly chart shows you clearly a range has formed since May of 2022. Okay, and you're in the middle of that range now. The top of the range is 446. Let's go and let's look at Deere and some of the fundamentals of Deere, okay? Right now in the quant, it's a hold. Wall Street says it's a buy. Their average price target, 411. The 52-week range on this one goes between 419 and 340. 419 and 340. So you have about going back to 2022. Does it reach 450? I don't know. Maybe. Again, your average win is 7.35. I like this one, but it's a little bit extended. Would I buy it now? I'm not into industrials. I'm not looking to get into industrials, so it's not my thing, full disclosure. I just think that these scans are important to look at if you're into these companies. So, and you can get it right here. Now, the third thing that I sell that I'm affiliate with is AlphaPix. Say you just listen to me and you're like, I don't know what to buy. I don't know what to sell. I don't know what to do. AlphaPix is a cultivated, data-driven stock portfolio that is based on the quant from Seeking Alpha, okay? The quant masters, there's like 4 or 5 people, and they come together on the 1st and the 15th. We're going to get one tomorrow, the 1st and the 15th, and they give you their top pick. And they say, we're going to buy it in the portfolio here. And then on 15th, they say, and they tell you, after they buy it, they will hold it, and they will tell you when to sell. And the reason I'm an affiliate of this one, I'm not usually a huge fan of when to buy and sell, but look at the performance. That's 114% versus 38% for the S&P. That is phenomenal. The link that I have, the third link here down, it saves you $50 off of AlphaPix. Okay? AlphaPix, again, they tell you when to sell. It's multiple sectors. Most of these picks I would never even know about. So there you have it. Okay, 48 minutes. I think that's enough. Again, we're kind of in this middle area. If we check on, it's now 10 o'clock. If we check on the Qs, we're down 0.9%. We seem to have come back. So if I just take a look at a quick 5-minute chart, you can see where we opened up here. Let's see, September 30th. We opened up with a nice 0.24% candle. We're kind of just floundering. The RSI is 37. It's on a 5-minute candle. Again, on a weekly, you're a little bit extended. A little bit, but it looks like it might cross up and come back up. We might see a little pop. But again, if you take a look at the election years on that tweet, it's a little bit hard for me to get gung-ho on this one. Now, SMCI up 1%. Tesla up 1%. Taiwan Semi down 1%. NVIDIA down 1%. And Apple is up almost 2%. So it is what it is. I will talk to you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears. hopes and fears.